everyone, and welcome to Future Private. I'm Blythe Masters, a founding partner at Motive Partners, which is a next-generation investment firm which focuses on technology-enabled companies that power the financial services sector. And I'm a member of Forge's board of directors. We're here today to talk about Europe and the growing global private market opportunity. I'm joined by fellow board members, Christoph Hansmeyer and Kelly Rodriques. Christoph is a managing director at Deutsche Börse, a major international exchange and market infrastructure organization that's been an innovator for many years and has also been involved with Forge since early on. I'm also joined, of course, by Kelly Rodriques, CEO of Forge, the leading global private market securities marketplace. Forge and Deutsche Börse just last week announced a strategic partnership to bring Forge's global private market infrastructure and capabilities to the European market. It's a compelling and timely moment to target the European private market. There are more than 100 companies valued today in Europe at over $1 billion, and a growing pipeline of more than 600 that are worth more than $250 million. That compares to a global unicorn population of about 1,150 companies valued at more than $3.4 trillion, of which about half are located in the United States. Notably, venture investing is still in fairly early stage, but is also growing across Europe. Europe's venture market is behind that of the US, but catching up fast. It has a 30+% CAGR in volumes. Forge shows in its latest private markets update, a regular publication, that venture investors put $89 billion into startups in 7 of Europe's biggest markets in 2021. Despite the challenging economic and macroeconomic conditions in the Eurozone currently due to inflation, the ongoing energy crisis, and war, 2022 is in fact besting 2020's venture investment pace in Europe. $54 billion has already been granted to a wide array of sectors thus far. We'll take your questions at the end. You can submit these through the Zoom Q&A feature, which you should be able to see at the bottom of your page in your menu bar. So let's get to it. Kelly, what's fueled the acceleration of the private market in the US, and how is that spreading to Europe and globally?
Thank you, Blythe, and thanks for joining this as well as with Christoph. First of all, I think everybody on this call recognizes that in the last decade, there's been an explosion of access to capital for the private markets. You used to have to go public to raise $100 million, and now it's very common to see $100 million rounds privately. And really that creates some structural changes and factors in the private markets. First of all, it allows companies to stay private longer and delay the cost and complexity of being a public company. And we've reported that most of companies that go public now are 12 or 13 years or older, and really are trying to use their capital in the private time to become a larger company. And so one of the macro impacts of that is different investors that were previously not in the private markets are coming in to the private markets. These are public company investors that are now looking at opportunities to participate in the creation of big world-changing companies. You've also got some cap table dynamics that need to be understood. In the US, about 20% of a company is owned through stock options and employee equity programs. And over the course of a decade, if companies are growing to be worth $1 billion, $10 billion, $50 billion, you're minting a lot of wealth within the employee base. And that ride to going public does generate a point where liquidity is needed by hundreds, if not thousands, of employees. And so that's another thing, a phenomenon that we're seeing in the US market. When it translates into other parts of the world, and we're going to give some really interesting facts later on, it does at very minimum require dealing with regulatory regimes around the world. This is not just a US phenomenon. It's now spreading, but I think the complexities of dealing with that capital access, the liquidity requirements over 10 to 20 years, and the regulatory environment is really what the next frontier looks like as we see Europe expand and other parts of the world.
Thanks, Kelly. Christoph, so in that backdrop of what's been driving the US marketplace and spreading globally, what is it exactly that characterizes the unicorn universe in Europe specifically?
Thanks, Blythe. I would say what really characterizes the space in Europe is the high dynamic we have seen over the last 2 to 3 years. It has really been a super dynamic region, and you mentioned it, the CAGRs of what we have seen in terms of venture investing have really outpaced what we have seen in the US and even in Asia. And as you mentioned, we have over 100 unicorns already in Europe. A number of them were really created over the last 2 to 3 years only. So we had a number of companies who managed to get to unicorn status within a period of 12 to 18 months. And if you compare the number of unicorns to what you have in the US today, we are probably in Europe around 20%, but catching up fast. And when you think about Europe as an economic region, from a BIP perspective, it's probably not that far off to the US, but the unicorn population is still meaningfully smaller. And there's a real catch-up effect, which we are seeing, which we believe will continue over the next years. And I think what you really, the basis of what you're seeing is here, the ecosystem effect, which we have seen for many, many years in the US, developing with a number of strong venture firms backing the space, as Kelly has described, a lot of private capital being, so to say, provided to the system. And exactly that development we also see in Europe, and that's really exciting. I think if you compare, the unicorn population, we see a bit more fintech in Europe than maybe we see in the United States. And clearly, Europe is not one country; it's a region of many countries, and that leads to a lot of complexity. But there is a big pipeline here, and we believe there's a lot more to come over the next years.
Yep, that makes plenty of sense. So speaking for Deutsche Börse, which is of course one of Europe's largest market infrastructures, and it has capabilities across the entire capital market spectrum, from public equities through to listed derivatives and beyond. What is driving Deutsche Börse's interest in this space? And where do you see the opportunity for a major market infrastructure in private markets specifically, given that as we speak today, we've talked about some big numbers, but they're still tiny by comparison to your established markets. So why is this so important to you? And what is it in the strategic partnership with Forge that you're seeking to capitalize on in terms of that opportunity?
So I think Kelly mentioned it when he commented on it. A number of companies stay private a lot longer than they have done in the past, and I think that is a trend which we are also seeing in Europe. And I think that's really the exciting trend of a new asset class in terms of private shares that's emerging here, which we find interesting, and which we have obviously with our investment in Forge looked at over the last 2 to 3 years. And I think what we have seen Forge manage to develop in the US, we will see also happening in other regions in the world, Europe and Asia in particular. It's really a market for private shares that's emerging. There's a lot, so to say, that's required in building this market and making it a professional market that investors trust and can trade in. There's transparency, there's the need for proper access, there's the need for liquidity, etc. And I think Deutsche Börse, like other market infrastructure providers, are good in building markets. And I think that's why we believe, this is a very interesting, sizable market establishing over the next years. And I think that's why we believe we can bring something to it. And I think also for Europe in particular, there's an interesting other element here. There's really a chance for building a platform, a pan-European unified platform to trade private share capital. And I think the European market has always lacked a bit, let's say, the integration that the US market has, which I think is not good for the companies, but it's also not good for investors. And I think this really, Forge coming to Europe is a great opportunity to build this pan-European pre-IPO platform, which we think is great for investors, for companies, and for the economy.
Yeah, that makes all the sense in the world, and in that respect, you've got a clear example in terms of what's happened in the United States and how that growth in private capital has fueled an extraordinary wave of growth and innovation. So a real opportunity there. What about the cap table structure of European companies? Historically, the way that European compensation has worked has been really quite different than what we've seen in the US. So are European unicorns similar nowadays in terms of comp structure, or are there important differences?
No, I would say the European market here is definitely behind the US market. And I think probably the most pronounced figure where you see it is in terms of the share of employee ownership in the company. I think in the US, this has really been a market that has been developing over the last 20, 30 years. So it's highly professional today. And I think the structure of employee programs, and also the fact, I think what Kelly mentioned, that there's a very broad ownership by the employee base in the private companies, I think is something that is really unique in the US. And I think this is only what we are seeing early days developing in Europe. I think if you would compare a typical European company or private company to a US company, you would probably see that in Europe you have about 10% employee ownership, leave out the founders for a moment, versus in the US this probably goes more to 20% plus. I think this gap will fast close, and I think the European market to some extent is benefiting from what we have seen in the US, and there's obviously a lot of know-how that's coming over. So we would see that percentage go up significantly over the next years. And I think in terms of, the unicorn space or the private company space developing, I think the war for talent that we see today, we believe that 10% is quickly rising to 20%. I think the other point that we're seeing is that the share ownership, so to say, for employees is probably more tilted towards the senior employees in Europe, whereas the participation in the US is on a much broader level, down to, so to say, every employee. And I think also that we will see over the next years come. So I think that's the reason why we need companies like Forge also in Europe, that as the ownership in these companies spreads to broad employee levels, we need the access to liquidity over time for these people.
Yeah, makes sense. So Kelly, Forge has obviously started a new phase of intense focus on the European market opportunity in forming this partnership with Deutsche Börse. But you have been operating and available to both investors and private companies, not just in Europe, but globally until now, despite this renewed emphasis. So what can you tell us already from your experience is the demand like for access to private companies by European investors and as well as globally? And what is the demand like for US and Asian companies from European investors?
Well, look, it shouldn't be lost on anybody that the reason we rebranded the company Forge Global was because we could see that the private market transcended geographic borders. We could see this back in 2017 and 2018 with the emergence of Asian unicorns, and we could see it in the data that we're collecting in the PMU. We've done about $600 million of volume in Europe, typically with investors or companies that wanted to access US markets. And so these were transactions largely done under the US regulatory requirements. But we could see that there was an opportunity in the European markets and in Asia. And the trend line, according to the PMU, is pretty dramatic. In this last period, the last 2 years, we've gone from 13% of international participants to 30%. So we've seen a dramatic increase, and this really is partly to do with the ballooning market in Europe, and we just seen this firsthand. And if you think about it, it stands to reason. If you're watching the U.S. unicorn phenomenon as an investor or as a founder, you aspire to participate in that market. You want to build a big world-changing business in your region, and you certainly want to invest in companies that are growing and changing the world and changing the landscape of your domestic economy, no matter where you are. So this to us was kind of a slam dunk when we looked at what the data had to say, and then everything else is about making sure that when you expand globally, you're taking everything you've learned from the expansion of the US market and saying, where does it fit? And how do you need to address the legal compliance and regulatory rules that are complex and different in other parts of the world? So anyway, we're really excited about it and think that this is a market that will continue to grow. We're at the very early innings of it, but we wanted to be out there in front.
Absolutely. And for those of you who may not be so familiar, when Kelly says PMU, he is referring to his private markets update. This is a regular publication that Forge puts forth. You can sign up for it on their website. Highly recommend it if you want to follow trends in private capital markets globally. It's a really, really interesting read. So that's where to go for it. Christoph, just adding on to the same question, what are you seeing in terms of buy-side investor interest from Europe?
I would say it's very strong, even in these times of a bit more market uncertainty. I think we see a lot of interest, and I think that's here to stay and will grow. And I think really the driver of that interest is the growth that we are seeing in the private company space. And I think growth is always the most attractive equity story for investors. I mean, very clearly, this is driven in the first instance by venture capital. You mentioned it at the beginning. I think in 2021, so last year, there was almost 90 billion of venture capital invested in the space in Europe, which is a big number for Europe. I think this year we are close to 55 to 60 billion, and the year is not over yet. So I think there's a lot of money going into the space. But also when you think about the firms maturing, I think the interest is growing from family office, high net worth people to invest. And even, thinking more, we are all for democratizing really the investment in the private market. So we believe, so to say, over time, platforms like Forge will really allow everybody to invest in the space, not just selected individuals. And I think that's very interesting. And we see clearly their attraction across all types of investors to be in the space because it's here to stay and it offers a lot of potential.
Yep, absolutely. So as investors think about private securities, obviously the essence of the difference between public and private securities is the amount of disclosure that the companies are obliged and the nature of the disclosure that they're obliged to provide, with typically much less being available in the case of private companies. So, and I think, again, there's a difference between the European private market and the US private market, where from the point of view of disclosure sentiment, companies may well be more guarded or secretive about what they're up to and why and how. Is that what you see in Europe? Do you think there's a distinction there? And how is the appetite for the kind of disclosure that will help fuel growth in transaction evolving in Europe?
I think it's a good point you're raising, and I think it's the reason why we need platforms like Forge to make these transactions possible. I think disclosure in that space is limited no matter where you look, be it in Europe or the US. And I think there are many reasons for it, because the companies obviously are in the early stages of development. They're growing fast, and I think they want to protect also their strategy a bit. So I think we don't see a big difference here. Maybe you can go to trade register, etc. in Europe and search for information, but it's always a bit fuzzy. So I think really platforms like Forge will help to make transactions happen in the space. And transactions, as you said, are more complicated, right? It takes more time in terms of legal documentation. It takes time in terms of accessing information, doing a bit of due diligence. And I think that's exactly where, so to say, a structured process is needed. And that's where Forge comes in. So we don't see a big difference in terms of disclosure. It's really about the platforms to facilitate these transactions.
Yeah, makes sense. And obviously one of the products that Forge offers globally alongside the capacity to transact is its data offering, which, while it doesn't address the individual disclosures of individual companies, does provide a lot more context around the overall market as a whole, which is another important dimension of building confidence for investors to be willing to transact. So I think that's fair enough. Kelly, another nuanced question here. In the past, because of the restrictions on transferability of private securities, there's been a practice where people have used forward contracts, which are not disclosed to the underlying company, to get around having to disclose sales of employee equity, for example, in that company. What's the position that Forge Europe and indeed Forge Global is taking on this?
Yeah, so look, I think first let me just comment on the state of companies' participation in overall liquidity programs as we've seen it. And look, the last 4 years has been an interesting time. And certainly we've seen through the pandemic and now through some of the macroeconomic factors that exist in the marketplace, a market that's gone up and to the right and then down and then up and to the right and down. So it's been kind of an interesting few years. One trend, though, is we believe that we've gone from a reactive market to a more proactive market. If a CEO and a board of directors are looking around at other companies and they're looking at the capital dynamics, both in terms of raising money and in providing liquidity programs formally, that environment has shifted pretty significantly in the last few years. One of the things that we've seen, and in fact, we're intending to do as our very first offering in Forge Europe, is a company liquidity program that really works with Forge, our technology, to create these managed programs that a company provides to their employees, completely controls, has total visibility on all trades, on disclosure. And the disclosure issue is a really big one, because I think that private companies obviously have IP and have strategic plans that they don't want to share with the world. But when you're raising capital, whether it's for primary or secondary sales or for liquidity programs, there is a disclosure that every investor recognizes and every CEO recognizes is a requirement to raise money. And so I view disclosure of financial information a little bit differently, maybe a lot differently than your secret IP and what you're going to do. So we see these company programs as the next trend in the private market. We're bringing that to Europe, and to the point of forward contracts, these are really a structure. In the US, there are SPV structures that allow more rapid trading without disruption to the cap table. Forwards are a similar structure. We have not done an undisclosed forward in years and view that as really a remnant of the past of the private market. So I'd say that we think companies need to control this. And our view has been since 2018 that all companies get notified of any interested trade, whether it's a reactive trade or a proactive trade. So we think that this is really how it will be done in the future. And the European market, we believe, and I've spent considerable time talking to European CEOs to get in front of this, to offer this as somewhat of an employee benefit. So we think the market's right in Europe for that. And the programs we'll bring initially there will be targeting CEOs, boards of directors, to help them manage through this proactively.
Got it. Makes sense. Continuing on the topic of transparency, can you talk a little bit about how Forge is helping bringing transparency to the private market, the types of information that you're curating and collating?
So look, I think I would answer this way. The state of transparency in the private market is what we're kind of circling around here. And there's sort of two pieces of it. There's the disclosure piece, which is what do companies want to disclose? There are benefits to staying private. And those benefits involve, at this state of the market, having access to capital that allows you to build a long-term strategy and to be careful about what you disclose about that strategy. But as I said before, I think financial disclosure under controlled circumstances within a framework is how companies will go forward. And we're here to help facilitate that kind of disclosure under the guidance and leadership of the companies who are our clients. Now, Blythe, what you bring up with the PMU, the private market update, and Forge Intelligence, which we launched a year ago, and has received a really positive reception from the market, is around pricing, IOI data, and all of the kind of data that you would expect to be able to access if you were investing in a public company. That can tell you what else is going on, who else by sort of asset class and by investor type is buying into this company and at what price, and really the whole concept of real-time price discovery. Because look, we think that a great private market is one that continues to expand globally, has the flexibility to build a big world-changing business, but also has enough data about it to demonstrate that the valuations and the access to liquidity and investing is informed, because we all want to be confident in what we're doing. There's a lot of great private companies out there, but when you actually go to invest in one, you want to know what should I be paying for the company? And so we believe that the state of transparency is partly driven by a company's motivation to disclose financial information at critical financial milestones, whether that's raising primaries or running a liquidity program. And then further, Forge's proprietary data on the market, we believe, is incredibly valuable to the market and to investors, and even to CEOs that are pricing their next rounds. Because you want to know what indications of interest are out there from investors I've never met before in other parts of the world. And so we believe that that combination of disclosure and data transparency that we're putting out in our proprietary product really serves everybody's interest in the space. So that visibility is valuable no matter who you are. So we're super excited about what comes next. I think one of the biggest trends we're going to see in Europe and abroad is the standardization of financial disclosures in the private market. I think you're going to see that. You may actually see regulators come in and push for that. Yep,
absolutely. It'd be great to see more European content in that data offering. It would be terrific. So, for both of you, maybe starting with Christoph, what do you think the hurdles there are that impede the development of an efficient global private market to deliver the kind of geographically diverse opportunities to investors in Europe and elsewhere, require?
But I think it's a bit like Kelly said, it's still a very complex process to buy private shares. And I think we are all used to buy, or many of us have bought shares in the public market. It all seems very easy. It's a much more cumbersome and complex process, I think, in the private environment. And I think, the goal needs to be to make this more efficient, more standardized, and faster over time. And I think that's what Forge is striving for. And I think that's what all we believe in. And I think, clearly the US will lead the way here. Europe, which we are just starting with Forge, is a much more complex regulatory environment. you're dealing with 4, 5, 6, 7 countries initially where we'll start. And I think each of them has their own regulations. So I think that's another level of complexity. But the goal needs to be to make ideally the transactions as smooth and seamless and efficient as they are in the public markets today over time. And when you think, even 5 or 10 years out, depending, I think people have different views, this might even be tokenized over time and then really become instant settlement, etc. So I think, the vision here needs to be, bold, but it will take a bit of time to get there. But I strongly believe we can get there over the next years.
Yep. Hey, and I just add, I guess when I look at what we've learned here by being in the space for over a decade and looking at the complexity and breaking it down a little bit further for people who are on the Zoom, a lot of times people don't see the fact that the complexity is both an operational complexity inside of a company, and we believe that infrastructure that understands and has learned from the complexity of doing transactions around the world is a fundamental requirement for opening up the market. And what I mean by that is when you take a look at what it takes to trade between the US and Europe and Asia, and within those markets where the counterparties are European and maybe in different countries in Europe, or within Asia in different regions in Asia, what you figure out is this is going to take probably 5 to 10 years to build software that can deal with that complexity. But it starts with the expertise of having traded and being present in those markets. One of the reasons why we partnered with Motive and why Deutsche Börse is a partner in Europe is understanding global capital markets and the complexity of trading in them and building that into software. And until those markets get robust enough where companies have that expertise that they can then develop into the technology and you've got that infrastructure scalable and ready to go, the markets will continue to expand, but not at the pace that they can. And so our mission is to invest in that. It's the reason we went public. The irony of our public presence was that we needed to have a level of capital, credibility, and capability within those geographies to build that critical infrastructure. And so that's what we're focused on doing. And look, it's going to take time. We're going to stand this up in Europe. Eventually, we'll be in other parts of the world. But I think the world needs an infrastructure provider that's taken all that expertise and built it in for the benefits of all the participants in the market. I know there's a lot of questions that'll come out around priorities, but we certainly believe that access, which was our number one statement when we went out, we want more people to participate in a safe and secure market, really requires that someone step up and invest. And I think it's going to require a lot of investment over the next 5 to 10 years.
Yeah. So we're going to open it up now to questions from our audience. There have been a couple that have come in that I will address, but as a reminder, you can submit these using the Q&A function on Zoom, which should be visible at the bottom of your screen in the toolbar. So actually, first question came in for me, which is that I've witnessed a lot of innovation over the years in markets globally and in Europe. And as the private market expands there and more investors have the opportunity to buy shares in unicorn companies, how do I see this fitting in alongside other market expansions in the region? So I'll start with that, and I would say firstly that there's nothing particularly unique about the phenomenon that we're seeing in Europe, in the sense that it's part of a set of global trends that are very much long-term evolutions that are occurring across multiple jurisdictions. Both Christoph and Kelly have talked about the ways in which Europe has the opportunity to catch up with other regions. But again, the big drivers of change and of transformation and of opportunity are common across the globe. So what are those into which this context fits? Well, it's an overused phrase, but there's a term relating to the democratization of finance, which really is talking about ways in which markets are opening up to provide access to individuals to an array of products, not limited to private corporate securities, but to an array of different asset classes and types, to provide that access to individuals where previously this has really only been the domain of the institutional investor, that's the middleman, if you will. This democratization in some spaces has gone all the way down to the individual retail. With private securities, it's typically higher net worth individuals, accredited investors, or their equivalent around the world. But that's a trend where the self-directed, self-engaged, directly engaged individual is very much a driving force that we see, and I see this opportunity that Forge and Deutsche Börse are positioning to facilitate as being absolutely critical. And underlying that on a global basis is the rise of the middle classes with disposable income seeking investment opportunity, and facilitating all of that is another trend, which is the digitization, the electronification of marketplaces. This began many years ago in the cash equities markets, but it's progressed through almost every other asset class, from commodities, foreign exchange, fixed income. No surprise that what Forge is doing here is facilitating the digitization, electronification, standardization that comes with that, that eases access, along with the opening gradually of wealth architectures. So another phenomenon to which I believe this is very relevant is that wealth advisors around the world, whether they be private banks or RIAs in the US, independent financial advisors elsewhere, are and the big wirehouses, the big broker-dealers, are increasingly realizing that to be competitive, they need to have a complete offering of product that is not just their own manufactured product. And as that wealth architecture opens up, the opportunity for individuals to access private securities is growing. So that's the context, and that's what I see as driving opportunity and the companion trends that Forge and Deutsche Börse are taking advantage of here. So this is a question now for Kelly. In the US, CEOs and boards of directors are definitely becoming more comfortable with the idea that stock in their companies trades on a regular basis. They're less hostile to that. European CEOs and investors are still really only just beginning to build that familiarity. So what do you think that process will actually look like, and what will the dynamic with employees look like?
Okay, so let me first state that last year I went to Europe and participated in a conference with a couple hundred European CEOs. It was a global conference, but there was a pretty high concentration at Web Summit of founders, and there was a whole track done on this. I think a lot of the European CEOs are looking to and are interested in what's going on in the US markets. As Christoph pointed out earlier, the cap table structures in Europe look differently. And I'm just figuring this out as I've gone in and started to talk to CEOs as well. I think there's an opportunity for the next generation of unicorn CEOs outside the US to come into the market with a view that's really formed by where we are currently in the US, not where we were back in 2018. And some of the way they're getting that is a lot of the deals that are happening in the US are actually led, a lot of the deals that are happening in Europe are actually led or participated in by US-based VCs. And part of the value they're bringing to those investments is this is how it works in the States. But the conversations I had last year in Portugal were really about how employees should participate in the wealth dynamic of the creation of these companies. And I got to tell you, the European culture broadly for business seems much more conducive to me to the way and views of having employees participate in the equity and liquidity opportunities of those companies. I was struck by how easily the CEOs in Europe embrace the idea that part of what they should be providing for their companies was a liquidity program. Now, the capital structures of phantom stock and some of the ways stock options differ here than there need to be taken into account. And when I was talking earlier about infrastructure, I think we need to be mindful of the fact that in Europe and other parts of the world, our cap table and cap structures are different. But the mentality of the CEO and of the company and culture of a company drives, I think, a lot of that answer, Blythe, and for whoever posed that question. I think that's the reason why we're starting there, because we think if you're going to form a company, this is something that your employees will respect, and I think that it's a strategic thing for a company, because the battle for talent has been waging in the US for a decade. If you ask any unicorn CEO in the US what his number 1 or 2 challenge is, it's going to be the battle for talent. And so to do that, you've got to build that system and that program for compensation, including equity, which is probably the largest life-changing part of someone's compensation who works for one of these companies, into your program. And that's where we see Europe being actually more progressive than what we've seen in some cases in recent years, even in the US market.
That's actually fascinating observation, and really interesting that you heard that at that kind of a venue in the heart of Europe. So thank you for sharing that. So I think this is a question for both of you, really. How would one think about data availability in the European market today, at the present moment? Many US companies are Delaware corporations. They have publicly filed charters, more liberal data sharing policies, and obviously Forge has accumulated a substantial history of historical transactional data. How does this translate to the European market, where it's just still tougher to get around issuance prices, to get access to issuance prices, cap table and share class information, historical, private transaction data, and so on?
Christoph, Christoph, would you mind sharing with the crowd some of the stuff you've shared with me over the last few months of setting this up around what's accessible on cap tables in Europe? I found that particularly interesting.
Yeah, before, happy to do that. But before I say that, I come back to what you said before, right? I think, this is all about expertise that you have to build, and this takes a lot of time. And I think it's really a question for you to answer. But I think what we have seen over the last years that we have been an investor in Forge, you have accumulated data on European trades, obviously, because you have done trades. And I think this is all about, so to say, really being in the market, being in the heart of the market, and accumulating data over time. And I think that's a real value, and that value is not easy to replicate and build. And that's, I think, why Forge is so well positioned and so valuable. And I think there will also be a lot of transfer from what we have seen in the US, how things are priced, to the European market. I think what Kelly, you referred to, is that what I alluded to earlier, I mean, there are opportunities and ways, so to say, to get certain or scrape certain data from public registers, etc. And I think if you do that quite systematically in Europe, it's a good start in terms of information. It's clearly not perfect. I think, as all the experts on the call know, in terms of getting the true picture of a cap table, including dilution, etc. But I think it's a good start, and I think it's a bit like doing a big puzzle, right? I think there is data that you can pull publicly. There is data that, so to say, you will get from transaction, and I think out of that, one builds a big and a comprehensive picture over time that's very valuable.
Yeah, so I just add this at the end here. We have amassed a great deal of data. There's other data providers out there in the private markets that track fundraising and primary capital filings in Delaware. We really are focused on trying to aggregate as much data on transactions that have happened or that are trying to happen. And we think we use this price discovery equilibrium internally within Forge to describe the point at which we see markets within very specific names of companies where bids and asks for a company's stock start to converge, and it creates, a true price discovery mechanism for investors around the world. We think that that's one of the really important things to track, because otherwise you see a lot of variability. I mean, when you watched what we thought of was the most highly traded private company in history, Palantir, before they went public, they had been allowing and actually encouraging liquidity and secondary trades for close to a decade by the time they went public. And one of the interesting things you could see when you look at that data is you see a pretty narrow bid-ask range. I mean, that it traded in a fairly narrow range for 5 years before it was within a couple of months of going public. And it created a view into a company that you rarely see that's private, which is a real market for buyers and sellers. And of course, there were periods when the market slew down and you couldn't get out of it or you couldn't get into it for the price you wanted. But I think we see that as part of what European investors and I think European companies would benefit from as well. So we think that the Forge Intelligence offering is really meant to try and bring to bear in the Europe market what we're seeing now in the US. And Christoph points out that some of that came from, having to cross those trades and the expertise that we generated here over time, and the complexities, as I said earlier, to do it in different jurisdictions. But the data is still the data. And I think that's where we think the next phase of the market will really benefit.
Thank you. Question for Christoph. How do you think BaFin, the German financial regulator, would be looking at Forge from a regulatory point of view coming to Germany?
Good question. So I think this the regulator is probably listening in. So it will be, what we're setting up in Europe will be a regulated entity. And I think this is, we will go at it as professionally as we can together with Forge. And I think that's where, we bring both expertise together. Forge, clearly the expertise of having traded in the markets for many years and the software and the technologies and the operations to do it. And then Deutsche Börse as one of the major capital market infrastructure providers in Europe, the regulatory expertise. So we will file for the required licenses in Europe and the UK, and we will build a proper regulated business.
Yep. That's clearly one of the benefits from Forge's point of view of working with a partner like Deutsche Börse that has that depth of regulatory knowledge, not just limited to Germany, of course. Another question oriented, I suspect this question is coming from someone sitting not too far from you, Christoph, but in Germany somewhere. Given that most German private companies have virtual stock option structures where they have them, does that create a problem or an opportunity for Forge?
Well, I think it comes back a bit to what we said before, right? I think the structure of employee participation and remuneration is clearly not as developed as it is in the US. So I think from that perspective, we'll see a bit of challenges at the beginning, because obviously, virtual programs are more challenging, so to say, if you think about trading it. But I think that will change over time quite fast, and I think we will see a very much a transfer of what we have in the US in terms of employee shareholder structures to Europe. So at the beginning, I would say it's rather a challenge, but I think this will equal out over time.
Yeah. So I think we'll make this the last question for both of you, maybe starting with Kelly. Do you think that there are specific types of investors that you would anticipate being early movers in the space and taking advantage of the infrastructure that you're building? Do you see asset managers, hedge funds, venture funds, individuals being involved? What do you think?
It's a great question. We've been really looking at the segmentation question, both within our current customer base, but more broadly around the world. We believe that today institutions are driving the larger volumes. And certainly when a company starts to trade, if it's going to trade in significant numbers, then that will likely be led by institutions. Now, it comes down to your definition of an institution. And obviously in the US, there are big name investors and VCs that have driven this market. But what's interesting is if you look out over time, there are family offices, there are wealth advisors, and there are very sophisticated investors that are turning their attention to this market. One phenomenon that we saw in 2020 and 2021 is the move from major IPO investors that were syndicate buyers of IPOs into buying pre-IPO private companies. And the names that we started to see show up on Forge looked like the kind of names that a capital markets desk would sell an IPO to. So that's happening. And that big shift is happening primarily here in the US. But before that, you saw the emergence of specialized advisors and investors and families. And if you think about it, a lot of wealth in big family offices around the world are created by equity, by a CEO or a family that was an investor in a private company. And they in turn become investors in other private companies. And so there is a network effect. And so the European client base that we've seen show up at Forge to buy US companies have been family offices in many cases, or institutional investors that don't look like traditional venture capitalists. But we think based on the return profile, if you just look at the last 10 years, there's a tremendous interest in it. And to your earlier point about democratization, we want to make it accessible for a broader group. But I'd say the highest level of interest right now exists within institutions who are looking at the private markets. I'm talking to them every day because they're public investors as well. We have Tomazic as an investor here at Forge, and they have incredible interest in the private global market. But we also have the emergence of high net worth individuals that like to get information and participate in family offices. So we're going to start there and put a lot of our focus there. Christoph?
Yeah, makes sense. Christoph?
Hard to add anything to what you said, Kelly, but I would only say that really this is becoming a new asset class, right? And I think the institutional investors clearly are the ones that can ultimately provide the very large volumes to the market. And I think, whereas they might have invested in the past through venture funds and at different stages, I think they see the dynamic in that part of the economy, and it's very attractive to them. And I think investing directly in late stage pre-IPO companies, not through a fund, etc., is also for them very interesting in terms of the return profile, the fee structure, etc. So I would suspect this is really becoming a new asset class in the allocation of many institutional investors. And I think that's what will drive the market here.
Yeah, I think that's absolutely right. And if you look statistically at allocations to privates, essentially, the larger, the more sophisticated the entity, if you move up the quote food chain, the higher the allocation is to private asset classes, not just to private corporate securities, but private assets as a whole, including private credit, real estate, so on and so forth. And you'll see allocations, for the big institutional, the sovereign wealth funds, the pension plans, and the likes. It'll be either the 20 or the 30% zip code. But if you look at retail, or even accredited investors at the higher end of the wealth spectrum of individuals, those allocations are between 0 and 5%. And you talk to the RIA or the IFA, wealth advisors that are advising individuals or families, their allocations are structurally lower, but also structurally rising. It's a global phenomenon. So I think you're going to see intense interest, both individuals and those ultimately serving individuals, to sort of even out that parity, especially now that the performance of public market securities has been so challenged at a time when both equities and fixed income have been under pressure in a way that we really haven't seen, in a cycle that looks more like something that hasn't been around since the 1970s. So with that, I think it is time for us to wrap up. Thank you to both of you, not just for being on this webinar, but more importantly, for bringing a critical piece of market infrastructure to the European markets. Thank you for your vision and your commitments and your precious time and resources, both of you, and your dedication to getting that done. I know an enormous amount of work has gone into getting this initiative off the ground, and there will be many in Europe, directly and indirectly, who will be grateful and who will benefit from your efforts. There's going to be a replay of this event. You can access it on Forge's website at forgeglobal.com. You can also go there to sign up for the publication called Private Market Update that Forge regularly publishes, and also read about Forge Intelligence, the data product that Forge offers. All of that can be found again at forgeglobal.com. And it remains just for me to say thank you to you, our audience, for having joined us and given us your time today. We are most appreciative. Have a great day.
Thank you.